All right, great people. We're going to go ahead and get started. Hopefully, everybody's feeling well. Excited to be here with you guys. We're going to jump right into this thing. This call is being recorded. So if you do have to step out for any reason, understandable. We're ready here and live. Let's jump right into this. Very impactful day today. After hours, of course, we saw Oracle gap up. Another one of these earnings that seem to just keep popping off. But I want to take us kind of through it. I know today's September 9th and it's over. So we'll be right here on the 10th. A lot of questions coming in on the back end as far as expectations of what's getting ready to happen over the next couple of weeks. We had a Federal Reserve interest rate decision, which is getting ready to happen, come in on next week. So already the 17th is right here live and available. So we're going to go ahead and get started here. So hopefully everybody just have your notepads. We're going to jump right into everything and kind of break all of this stuff down. With the Fed, what the expectations are going into the Federal Reserve interest rate decision. So kind of just some preliminary things when it comes to the Federal Reserve. Right now, there's an 88% chance, right? So I want you to put that down on your notes. 88% chance that the Federal Reserve cuts rates by 25 basis points. So that's what it's looking like on the Federal Reserve. Is that we're going to get we have an 88% chance while the Fed is going to do a 25 basis point cut. So this is what some of the things that I go over as far as forecasting what the Fed is expected to do even next year, right? So they're looking for a lot of rate cuts. A lot of the market is pricing in more rate cuts. So I know that usually September is, one of those months that realistically is a bit bearish, right? So to start off the month, we've actually seen the opposite reaction in large part due to some of the tickers that have actually taken a move. So let me go ahead and share my screen with you guys now. And there we go. So let's talk about expectations. So first things first, the expectation actually coming into this year was that we were going to get 4 interest rate cuts. Now, if you go to the federalreserve.gov and you take a look, you take a look at the previous meetings, a lot of us may have already attended these meetings in general. But honestly, we have not actually seen a Federal Reserve interest rate cut yet at all. So the Fed has not cut rates here, right? They have not cut rates at all this year. The last time the Fed cut rates was last year, right? So we're reaching a point where we're almost hitting a year without a rate cut. Yet, this is why I always speak to this. We'll talk about the tickers maybe a little bit later on. But let's pull up the QQQ in addition as well, S&P 500. And let's talk about where we sit at on both the SPY and the QQQ heading into this interest rate decision. So two things to note here is that the SPY we'll go on a monthly time frame on both. If we look back to last September, we were at about 480 on the QQQ. We go back to last September, we were here at 570 on the SPY. So we're still higher, even though there were forecasts for us to get rate cuts, and there still haven't been any rate cuts. We're still higher than where we were a year ago, right? So looking at that, this has been an incredible run, market rally that we've been on since April, since the bottom when the market pulled back since April. So it's been a lot of good things that have actually went ahead and happened over the past couple of weeks. Excited to see once again a significant breakout here on the SPY. And the names that have led us, of course, have been NVIDIA, the AVGOs. Microsoft hitting $500 has played an important role. Amazon, right? But those two names, AVGO and NVIDIA, have played a huge part being two of the top 5 names within the NASDAQ. Just last week, we saw AVGO actually passed Amazon as far as holding allocation within the QQQ. So now you have two of the top 4 tickers belonging to the semiconductor industry. So incredible run there. So there was some news that came out earlier today. So the Department of Bureau of Labor Statistics came out with some preliminary annual revisions to its payrolls data, and it shows that the U.S. economy likely created 911,000 fewer jobs in the 12 months through March than previously estimated, suggesting an average monthly payroll gains were less likely than half of the 147,000 that have been reported. So this is where people come in all the time and they talk about that the data is skewed, right? And the data a lot of times really is delayed, which is true, right? And I think a lot of us have seen the jobs numbers come out on a consistent basis over the past year and just say, hey, it doesn't really match up with maybe what you're hearing from your family members, your friends, et cetera, what you might be seeing around your own workplace, right? We've seen, et cetera, a ton of people get laid off at a high pace this year, right? And so the data to us has been skewed. How the unemployment rate is still at 4.3%, it's a little bit tricky there, right? So a lot of people don't trust the data that's coming out. Now, what we're looking for is a 25 basis point move, right? And so a 25 basis point move is what's expected, right? Now, we are seeing, we're kind of projecting to see maybe a third rate cut. So let's kind of go to the meeting calendar. So we have 3 meetings left. There's a rate cut price for September and as well for October. We also have a December meeting, which will take place December 9th and 10th. So on that Wednesday, December 10th, they're starting to be priced in that we could see another rate cut that actually comes in December, right? So they could, this is what we do see. And then for January, which will be our next meeting after that, we'll get that date. It'll be towards the end of January. Less than 40% from nearly 50-50 was kind of split. So Fed Chair Jerome Powell said last month that rising downside risk to the job market may warrant some cautious policy easing, but central bankers remain wary of easing too much while inflation remains above the 2% goal, right? The Fed gets a pair of inflation reports this week. So we actually do get, if you come to your economic calendar here on Market Watch. So if you go to your economic calendar here on Market Watch, this is your number one go-to place, right? And let me just paste this information in here for you. So you just had that. But if you take a look here, tomorrow morning, we're going to get the PPI numbers, the producer price index. And then on Thursday, September 11th, we will have the consumer price index. So the CPI. So the CPI numbers are actually going to come out on Thursday. So they flipped it this time. Usually CPI comes out before, but this is just the way the calendar fell. So the PPI will come out first, right? And so you're not going to hear from any Federal Reserve people at all. They're done speaking. They're in a blackout period. So you're not going to hear about them at all, right? So you won't get any news or you won't hear any Federal Reserve speakers until you hear from Jerome Powell on the 17th, which will be next Wednesday at 2 p.m. All right, so next Wednesday, 2 p.m., put that on your calendar, September 17th, 2 p.m. Now, traders see a chance that the Fed cuts by a half point. This is a more so rumor, right? I don't think that it actually happened. I think that we're probably more likely to get, based upon the estimates, to get the 25 basis point move. So like I said before, if you take this right here, you are going to get what it looks to be. You are going to get a 25 basis point move. You got an 88% chance. Now there's a 12% chance saying that the committee might stay put where they're at, right? So that's pretty much what we have for now. So 88% chance going as of this week that we're going to get that 25 basis point cut. So that's the number, that's the notes there, right? So you can actually take a look at this information right here on CNBC. So we look, I want to take some time to actually go through and look at the top holdings, QQQ, SPY individually, DIA as well, right? So the QQQ has been on fire. So let's showcase exactly what the Qs look like here now. So you see Broadcom is here at 6%. So pay attention because NVIDIA has jumped to the number one spot. That wasn't the case a year ago. Now you're looking at Microsoft here at number 2. Of course, Microsoft has always kind of went back and forth between 1 and 2, but Apple's sitting here at number 3, right? Right here at 8%. So Apple's dropped from about 11% to 8%. Now, Apple had their unveiling of the new iOS, new Apple Watch, new AirPods, and also the iPhone 17 as well. So it was a day for Apple to kind of showcase their products. You see Amazon dipped as well. You see Meta Platforms, even Tesla's holding allocation has dipped in this ETF, falling from 5 all the way down here to potentially maybe dropping out of the top 10, depending on how this performance of this stock goes. So this is the makeup here. These are going to be the stocks that actually need to continue to move upward in order to keep this thing flying high. I will say that out of these names, specifically Amazon, Meta, Alphabet, and Netflix, all look to be in patterns right now where they're projected to break out. You got Netflix, which looks like it's about to run to $1,300. You got Alphabet, which has been running since last week. They don't look like they're done. You got Meta Platforms. We talked about them breaking out of this falling wedge. You have Amazon, which we're expecting to break over and run through 240. Broadcom, which is already broken out. So the cues don't look like they're going to stop anytime soon based upon what we see, right? Running into October, you combine things with a rate cut and these names take off, we're going to be looking at the QQQ at $600 sooner rather than later. So based upon that here for the rest of the month and going into October, it's hard to imagine with the bullish setups that we have here from a technical perspective, when we start looking, pull our charts up here, and we'll just go solo screen. When we look, we'll start off with Meta and we'll work our way. It's hard to imagine that we're going to see any real downside action unless the Fed just bombs things, right? But we're looking at a falling wedge breakout here. We think Meta can make a run to 800. We believe they just started their 800 campaign. If we look at NFLX, breaking above right now, this 262, a break over 270, 1271, right, is going to get us all the way to $1,300. So we're expecting Netflix to break out, right? And then we also have Amazon, which just got above 237 today, right? We're here at 238. The next move is breaking over this all-time high and making a move higher. So we're expecting Amazon to do that. So, looking at all of those names inside here, the QQQ, Alphabet's done their thing. And then we even have Tesla, funny enough, just as a note. Now, Tesla's probably the one we trust the least out of this list. But if somehow, some way, Tesla can figure out how to get going, 363 is that pivot point level. I want everyone to put that down on your notes. 363. If we can get Tesla above 363, we're going to be cooking with fish oil. So we need Tesla to get above that 363. We've been waiting on it. It's been playing around. It's been trying to get above. It's just been unsuccessful in doing so as of right now. So we need Tesla to get above this level to be on a breakout side. So that's what we're waiting on here on Tessie. So we can get it. Important. We like to see, once again, we like to see this move upward to the upside here for Tesla, right? So it has to happen, right? So 363. So now your bottom half of your QQQ is likely to continue to push upward, right? So obviously names like NVIDIA, Microsoft have made a move and Broadcom have made their move already. But now some of the back end names of the ETF or the top part of the ETF look actually pretty good, right? Now, when we hit view all, and you scroll down, we do have Adobe, which is getting ready to go ahead and report. Palantir and AMD are also right out here. So let's look at Palantir. So Palantir did something today that was also very bullish for PLTR. I know Palantir pulled back a few weeks ago. So let's talk Palantir. Top of August, Palantir pulled back, dropped from about $190. Based around here at this 148, it's been kind of trading and consolidating sideways. After hours today, once Oracle reported, and my, oh my, that was a report, we were able to get above and close above this 162. So we're breaking out of this bear flag pattern. We've been sitting in this bear flag pattern, which is a high probability setup to the downside. We've never been cleanly able to break below this 148. You can see we wicked below it here on Wednesday, the 20th of August. but it just was not able to hold. So then price broke back upward. So we're looking actually pretty solid here on Palantir. Few of us are locked in on the long side. So if Palantir can get above 169, I mean, this thing can go further. So we'll keep our eyes here on PLTR, but we like a recovery in that order. Now, as far as for AMD, pulled down to about $150. Buyers step right back in. Of course, after hours today, AMD as well went up with NVIDIA once Oracle reported. So there's 162, the same levels from last week, 162, 164.66, and 169. So AMD as well pulled back there at 180. All right. So that's what we're looking at for those tickers. So just wanted to kind of dissect that. Now let's take it to the SPY, right? Obviously, a lot of the same tickers that are here. The DNA and the genetic makeup, just different holding percentages. Obviously, of course, you have more companies on this ETF than the QQQ, but relatively the same names. So NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, JP Morgan Chase, Berkshire Hathaway, B. Then you take a look, Eli Lilly and Company, Netflix, MasterCard, Walmart, Costco, Home Depot, Johnson and Johnson. Funny enough, Oracle's here, Palantir, Chevron, GE, United Health. So we saw today a nice breakout of the sector that we've only been talking about for an extended period of time, guys. I understand that UNH was getting beat up pretty bad, but this is why when we talk XLV and we go to the XLV ETF, uh, this is going to be your healthcare ETF. This is why we go so hard on sectors that get beaten up when there's presented an opportunity. So Eli Lilly and Company, United Health are two of the top four tickers within this ETF. So UNH is back on the breakout, right? So now being above this 341 was very solid for us today. Getting really just back above that 320, you saw a massive breakout. So I don't think that UNH is going to go straight to 366 and 386 just off rip. It's just not how it works. But I do think that we'll probably see a little bit of a pullback first, and then we'll take a move higher. But we will see UNH get back above 400 before you know it. Maybe early 2026 and UNH, because it's sitting in a discount zone right now, the XLV and names like Eli Lilly and Company. So these are your times. I know some people have gotten exposed to the 2X levered ETFs, which is good. But I also want to give you the breakout level here for Eli Lilly and Company. And that breakout level is right here at about 775. So I want you to set an alert for 775. If we can break out of that downtrend that we've been in here on Eli Lilly since the beginning of May, we pull back down from $900. We've been trading within this channel. We stretch this diagonal trend line across. The momentum is going to carry Eli Lilly and Company upward, UNH. So we're very bullish on these names right now. We like the way that these names are actually set up pretty much perfectly here. So the healthcare sector is in a really great position if you're looking to be a buyer in this sector. So this is why we kind of hounded it for so long. I get in the midst of things, it could definitely be very frustrating. But when you take the time to really focus on buying the business and not necessarily paying attention to just individually the stock price, the XLV ETF, Eli Lilly and Company, UNH presents you a really great opportunity at this time, right? So same makeup on the SPY. So obviously the SPY and the QQQ correlate and trade so much together in sequence. So those are your top holdings there, specifically on this ETF. Now, let's talk about some of the riskier assets. Let's go through some of our names like Upstart, right? Because a lot of people have had questions for me uh, as far as like names like Upstart. And then let me also pull up names like Affirm, right? AFRM. There we go, Affirm Holdings. So let's talk. Affirm is actually doing a little bit better than Upstart right now. But what's specifically, the main questions that I'm getting asked is, do I think that going into next week that these should be two tickers that you pay attention to very closely, your interest rate sensitive businesses, right? And I definitely want to highlight, here at this time, you want to focus on making sure that these two names you set alerts on. Ideally, you want to pay attention to a firm above $90 and Upstart above $72. Those are the two areas in the levels where I think you can actually see some movement upward, right? So a firm and Upstart to be two tickers that you keep on deck next week, especially if you're thinking about day trading or some short-term swing trades on these names. I think it'd be very, very ideal for you to keep these names in your back pocket because when the Fed speaks and when they do cut rates, I think you'll see both of these names trend upward that same day. So with a Federal Reserve interest rate cut, I think these will be two solid names that you can actually see, push there to the upside. So those are my thoughts on some of the interest rate sensitive businesses. Upstart, Affirm, two of those main ones, interest rate sensitive wise. So you do have an opportunity to really see a move there. Now let's talk about sleeper tickers that maybe not a lot of people are talking about, but these can be tickers that can really print you some money in the last part of this year, but you got to lock in on even now. Now, I made mention of Alibaba when it broke over 120. I've gotten a lot of text messages about people in Alibaba who's printing right now, but I want to give you guys some more sauce and game on this. To me, Alibaba still has a strong probability to go up another $15 to $20. So it's up about 4% today. There's been a lot of inflows in this name. This is a pretty fairly valued company. So when you pull up Baba, I know it's been in the toilet bowl for a while. There's a lot of risk on the table, when it comes to a name like BABA, Alibaba. So when you look here at Baba, you want to pay attention to some of the statistics, right? You got a trailing P here of about 16. So it's a fairly valued business that people are actually looking to pick up at these levels. So they want the stock in these areas, right? That's why it's been in an accumulation phase. If you just pay attention to the past 3 years, 4 years here, we're actually breaking out of this accumulation phase now, right? So getting to levels up here in 170, 180, it's only a matter of time before Alibaba really blows. So I like where we sit at here for Alibaba. I think some of the other Chinese stocks as well can follow suit, but I would trust Alibaba out of all of them the most, right? So BABA, Alibaba, expect a breakout in this fourth quarter from them and the Q1 of 2026. So Alibaba looking good. Breakout of an accumulation phase. This is the first time that we've seen a considerable amount of momentum behind Alibaba in a while. So things are looking really up for them. From a technical perspective, a massive breakout here on the horizon. This thing has just kind of been building its steam little by little over the past few years, and now we're expecting a move higher. So those are my thoughts on Alibaba at this time. So definitely do have this on your watch list and continue to monitor this over the next couple of months because we do seriously think it has a high probability of actually breaking out. Now, as far as some of these other names, we have seen a lot of stocks, not all, but a lot of names have hit highs and some have just traded sideways. So there's not really much discounts. This is what I've kind of continued to stress. Not really much discounts across the board. Now, one name that I do want to give that I do continue to see orders come in. And I want to give this name because it's a cheaper stock, but this is a stock that is going to be on the blowout, in my opinion, next year. So I know that's kind of I'm putting some things out there on it, but I'm giving it to you ahead of time. And it's Lyft. Some people are probably like, yo, he's talking about Lyft. Of course, you guys know my sentiments with Uber, right? So I've beaten Uber only for like the past 12 to 15 months as far as where I know price is going to go. It's going to be up there at 110, 120, and we'll be sitting pretty. But Lyft is a sympathy play, obviously, of Uber. But I want to talk about Lyft breaking out of this accumulation phase. A lot of times we wait until stocks are already on the run to start jumping in. But truth be told, this is the time where you really should be taking the opportunity to jump in on a ticker. So Lyft is honestly within my top 5 of small tickers. When I say a small ticker, anything less than $50 is considered to me being a smaller ticker. But this is a bona fide 5-star breakout play, right? So you're looking at Lyft here at $18. You can, in my opinion, easily double your money. Lyft easily can go from 18 to 36. Now, if you're talking about options, different story. My suggestion would be to build a position shares and get some leap options on Lyft, right? So this kind of reminds me a lot of the Unity play that we had, the SoFi play that we had. When I do take a look at this name, this is a 5-star bona fide breakout play. Now, we understand that Lyft is a work in progress business, right? You know, it's not an A-lister, it's definitely not a B-lister, and it's really probably not even a C-lister. This is probably a D-list business. But because of where it is at from not just a price perspective, but also expectations wise, business wise, this is why we think this can be a breakout ticker, right? So let's come here to key statistics. Let's take a look at a couple of things. The PDE is expected to grow. Come down. So we're expecting that business is going to take off. This EPS is going to catch up to itself. It's a stock with about 406 million shares outstanding. So it is a business that is considered to be what we classify as a low floater, right? So this is a low floater business at this time, right? So low float stocks are some of our favorite go-to names when we're taking a look at tickers. So low float, right? When we can find a quality low float business, these are some of our favorite names. You'll see a name right here to the side of my screen, Nebis, ticker NBIS, that we covered over the past few months as well too. Stock was up $31 today. They have about 200 million shares outstanding. So these low floater businesses, when they're able to get price to break out, this thing can actually take off pretty nice. So we like Lyft. Once again, this is a name you, in my opinion, you want to pick up. If you're not exposed to it already, this is a good price once again to get exposed to it. All right. So Lyft, continue to kind of build on this name. And that's realistically our thoughts on it at this time. One of our smaller breakout type positions. So just have that documented there for yourself. Some other things that we're watching, just kind of really waiting. There is a ticker right now that does have a pattern that I want you to add to your list. You're probably not going to hear much about this ticker other places, but we've talked about it a couple weeks ago, a few times, but I want to speak to it again here today. And that is what we call Rubrik. So I want everyone to go to their chart right now, and I want you to go to the weekly time frame and pull up RBRK, right? This is Rubrik, right? So Rubrik is getting ready to go on a breakout. And let me tell you why here Rubrik is getting ready to do it. So we have a bull flag pattern, ticker RBRK, bull flag pattern on Rubrik. So we talked about this ticker a few weeks ago. I was highlighting that, hey, it's in a bull flag pattern here. When it's time to go, it's going to be time to go. So you only have, ideally, for the most part here, you would have to go out till January because you only really have monthly options on this specific ticker, right? So if you are looking at Rubrik, you are going to come and see that I suggest anywhere between the $80 to the $90 calls for January, which give you 129 days until expiration. You need to use a limit order. Must use limit order when getting into the position, right? So why am I using limit? Because the bid and the ask spread on this ticker is going to be very wide. This is going to be a wide bid and ask spread. So I want to stress this for you guys. So when getting into Rubrik, you are going to need to use a limit order. Once again, limit order. I don't want anybody to get caught in the slippage. We talked about slippage earlier, right? So you're going to see a document that comes through that breaks down the whole play on Rubrik. right? But Rubrik is one that you need to pay attention to. You need to put on your watch list. And now let me give you, it's good to enter this position now. Once again, you want to get it with time. But let me pull up some of the things here on Rubrik. This breakout over 103, right? So this breakout over 103. Now you have a long pole that's been extended since April 7th. So Rubrik is likely a ticker that can fly over this level. There's a high probability that Rubrik breaks significantly to the upside. So once again, that's January 2026. Do not go for no October. That's 38 days. Not enough time for this. But listen, January, and you have in further contracts, you can go out further than that, but you have to actually use a limit order. So let me stress this again. Limit order. So if you use a market order and then you're saying, well, what happened? Why didn't, listen, I'm telling you now, in order to get into this stock, you are going to need to use a limit order. Once again, limit order. If you plan to get into it without a limit order, this is, once again, you didn't follow the whole thing. So please use a limit order getting into this position. It is very important that you do so. That's why I'm stressing it as much as I can on this call right now. So those are some of the things. And the last one we went over on the weekly watch list this week, but just to reemphasize, Unity Software, once again, is on the breakout. Over $50, Unity has a strong chance to get to 58. We really just want 50. We're locked in on January 2026 for Unity. So this is another January 2026 option. But we really just want 50, which is knocking at the door to be there in no time. But we would take, obviously, if it can get above 50, it's not a high, fast mover. So we understand that. Not unless there's some sort of significant report that comes out to pop this thing up. But we understand it's going to take a lot more volume to get us to break that high over 50 and to get to 58, right? That won't just be a walk in the park to actually go ahead and happen. So those are our thoughts with Unity Software. I get a lot of questions as far as SoFi technology. So let me cover that because SoFi is still on a breakout. Here's the thing about SoFi. We're at the top here. So SoFi getting above $28. So listen to me here carefully. $28, right? So if SoFi can get above $28, ladies and gentlemen, that is where we are going to see the major move here. $28. Once again, we need a $28 move here on SoFi Technologies is what needs to happen. $28, right? So that's what it takes. That's what it's going to take. $28 is what it's going to take to actually get this move. All right. So $28. Any questions on SoFi? Any questions? Any questions on SoFi? Check this chat here. Yep. Rubrik over 103. Do I think someone asked me, do I think is it too late to get in on Unity on the option side? The answer to that would be no. I don't think it's too late. No, I don't think it's too late for it. That would be my answer. Yep. Yep. Sergio asked about TMUS, which is ticker T-Mobile. We'll get T-Mobile. And then this is it. This is it. So as far as for T-Mobile right now, it's at about 242. T-Mobile is within the XLC ETF, right? So it is within the XLC ETF. If you want to go SoFi, I would say go out till June of 2026. If you're looking to get calls on SoFi, push it out as further as you can. There's some analysts who believe SoFi goes to 35. I'm not necessarily buying what they're selling right now, but there's some chance, a strong potential chance. Now with TMUS, It's likely that if we can hold at 231, that'd be solid. I mean, there's not really a clear cut, crystal clear cut setup here on TMUS right now. So there's not a clear cut setup. Yep. So that is that for this evening. Yep. That is that for this evening. We'll get these last tickers. This is it after these tickers: Snowflake, Hut, MU, and Adobe. We'll do it in that order: Snowflake, Hut, MU, and Adobe. So Snow, 225 right now. Kind of since earnings, kind of just been trading back and forth, range bound. So you here on a 4 hour. I would like to see Snow get back above 230 and make this move over 237. They were trying to break out of this accumulation phase, but were unsuccessful in doing so at 246. If it is, when it gets above 246, that's where you'll see it take its next move upward. Until then, it will kind of just trade sideways. All right. So let's get Hut. Hut right now actually is kind of breaking out of this accumulation phase that they've been in here since 2022. So Hut is on, looks like it's on the breakout right now. I haven't taken a look at this on a fundamental perspective, so I can't speak to that just this second. But from a technical perspective, this is a high probability setup to break out. I can see that just with the naked eye before I even chart this thing up. So for those asking about Hut, you are going to see a move higher on Hut, especially above 3190. So in my opinion, I would be bullish on Hut. 100% bullish on Hut over that level. All right? 100% bullish on Hut over that level. So if we can get that break over there, right? Lyft, I would prefer you to go ahead and get leap options or shares. Rubrik, yes, it's good to lock in on now. So look for the report that I drop on Rubrik by tonight. Yep. As far as MU is already hitting the targets. So if you're in that MU position from the watch list, as of tomorrow, you should be offloading some of that position here. So we're in the target zone. The last target is 140. So you got 137, which you hit after hours, and 139.69, essentially 140. So if you are in MU, be looking to start to offload. The targets are starting to hit as of today. So only took 2 days. It was a faster mover than what we thought. Right. So those are our thoughts on MU. All right. Last ticker is Adobe, and then we're out of here. Right. I will not be playing Adobe's earnings. I know that we've gotten drunk with seeing what happened with AVGO. I know some of us seen what happened as well with Oracle after hours. And listen, I want to just say, unfortunately, Adobe is not Oracle and it is not AVGO. Doesn't mean that they're not going to move, but honestly, I just don't really have much insight on what Adobe's going to do on earnings. I think guidance may miss, so that may bring the stock price down. I don't know if it's going to bring it significantly down. So those are my thoughts with Adobe. It's not one that I have a crystal clear cut. You know, okay, I'm gonna play the earnings, and this is why. Like, I really just don't have a crystal cut type analysis for it. Like, I had a gut feeling with AVGO and Oracle. I'll admit, I wanted to play the earnings. I'll be honest with you. I wanted to play the calls on Oracle. You know, just didn't happen. So obviously we look at it and it's just what it is. But yeah, I don't have that feeling with Adobe. So that's that. Yeah. Any thoughts on Oracle? I mean, uh just be ready. I mean, if you I would not buy calls on it at open, but I mean, I think there'll be a little profit taken. I wouldn't just hop in straight at open. It's a new $300 company. There's going to be a lot of people up in the morning. I will say that for my scalpers, my day traders, there'll probably be an opportunity where there's a nice little profit take tomorrow. And you could probably scalp some puts on that. Yeah. Yeah. So that's pretty much that for tonight. As far as other tickers within that top five, I'll disclose those at a later time. but just know that Lyft is in that list, right? Just know that Lyft is in that list. Yep. So we covered CPI and PPI already, brother. So we did get CPI and PPI at the beginning of the call, but PPI is tomorrow, CPI is on Thursday. Yep. All right, guys. So we're gonna head out for tonight. Y'all have a blessed one. And we'll be in touch. Make sure you guys stay abreast of that channel and be looking for those guides. We did drop a guide today. And there's the circles, yes, are for a double bottom. We did drop a guide today that gave you the positions and the targets and all of that stuff. So we did drop a guide there. So, yep. Y'all have a blessed one.